Hi and welcome to Credit Clear's presentation at the NWR Small Cap Conference. Credit Clear is an Australian-based fintech that specialises in providing highly innovative and proven solutions to help organisations significantly improve the effectiveness of managing their receivables. There's clients across Australia and New Zealand, and their platform can help large enterprise clients needing to facilitate consumer payments across multiple channels. The company provides a capability for tailored communications to facilitate payments at all stages of the cycle, from invoicing through to debt collection. The company recently completed a $15 million IPO and listed on the ASX last week with great success. Today from Credit Clear, we have Lewis Romano, the founder, and Brenton Glaser, CEO. I'll hand it over shortly to the guys, but before doing so, Lewis, in terms of introducing him, he founded Credit Clear. Prior to that, he was founder and MD of Australia's third largest job site, spotjobs.com. And Brenton has been an executive director of Credit Clear for 5 years before becoming its CEO last year. Prior to that, he founded National Credit Management Limited and was also general manager for law firm Hudson Lawyers. Guys, I'll hand it over to you now, and just a reminder in terms of if you did want to ask a question, just do so at the bottom with the Q&A box. Thanks very much, guys.
Thanks, Simon, and thanks for the introductions. You sort of covered all I need to say about myself and what I've done, so I'll pass over to Brenton, our CEO, to kick things off.
Thanks, Lewis, and thanks, everyone. Credit Clear is a business that it's quite unique, but it's extremely simple in that we're in our market to actually replace the use of letters, phone calls, and field calls. Historically, a collection activity has been around those three main areas, but as the world has moved along to digital, most receivable management areas basically are still held back 20, 30, 40 years ago, doing the same things they're doing, sending out paper-based letters, making phone calls, harassing their customers for payment, and getting people to go and knock on doors. So I met Lewis when we were a user of Credit Clear, when we started up a company called Credit Solutions, and that also was a tech-based business looking to improve the way we deal with consumers. So our whole focus, especially towards the end of my career, is really aiming to help our clients and also help the industry communicate with consumers in the way that consumers do want to be communicated with, which also happens to be a very cost-effective way of doing that. One of the things that's really helped Credit Clear this year is that we had, as we know, we had a Banking Royal Commission that had a lot of information come out of it. We had then a series of fires. Sydney had its floods, and then we had COVID. And all these things basically boiled down to one thing, and that was how do we communicate with people a little bit differently, and how do we communicate with people that may have never been in debt before? A lot of people found them in debt through no wrongdoing themselves, but they were just victims of circumstances, and we've seen that more than ever before. Our clients, on the other hand, are now saying we've got to do the right thing by customers, and we need to retain our customers, because winning customers in a commercial marketplace is very expensive, and it's better if we can actually look at retaining them. Our business is a small business, but it is growing quite quickly. Last year we had a turnover of $11 million. We would have had a little bit higher turnover than that, but we did have the brakes put on us with COVID. So we had the Essential Services Commissioners and the like putting the hold on debt. But what that's actually created is a ballooning of the ledgers. We've got clients telling us that they've got $30 million plus sitting in ledgers now that they even haven't been asking their customers for. And we're now starting to see a real improvement, which Lewis will tell you about in a minute, just around the amount of volumes of files coming through. The business is quite simple, though. I think everyone would understand that sending a letter these days, especially with Australia Post, can take 5 to 10 business days. And now to send that same letter via an email or send a message to a customer is immediate. And the difference of cost is a letter's costing $1.20 and a message costs us about 2 or 3 cents. So we can do things extremely quickly. But we've also following right through, just not with those communications. Our skip tracing used to take us an hour to find someone. Now it takes us a minute. We do what they call as data scraping of the internet to get the information we need at a very rapid rate of knots. And then even hardship applications, everyone's will be aware of the ballooning hardship applications that are coming out through all the things that have happened in Australia or around the world. But we've also worked out ways that we can reduce our hardship application processing time from an hour and sometimes over days to a minute, and be a lot more accurate. And this is interfacing directly into the banks with a customer over the phone that we can actually assist them immediately. Our business is quite successful in that we have about 800 customers. 70 of those are government departments. And at the moment, since December, we've been winning 80% of the tenders we're going for. Now, that's quite unique because a lot of these tenders are for water companies, power companies, the likes of AGL, Water Corp, which is the whole of Western Australia's water, SA Water. These types of companies are entrusting their customers to us. And that's all around the way we're communicating with these customers and the results we're getting. So not only is our speed quicker, our cost is dramatically lower, and also the tone of what we're doing with the customers is a lot more amicable for government and major enterprises. We work in all states of Australia, so we do have government departments in pretty well all states using us. We deal with people in the financial services industry like Bendigo Adelaide Bank. We have a sole contract with them. They've signed a contract with us that aligns them 100% to us. We've also recently had a lot of success with BMW Finance and Toyota Finance, who have been wonderful supporters of us. Our largest client is Transurban, and Transurban, as you know, looking after the toll roads, they have hundreds of thousands of people that fail to pay them for certain reasons throughout the process. At this point, what I'm going to do is I'm going to pass over to Lewis, and Lewis is going to tell you a bit about our history and also really a bit about the technology that he was a founder of. So over to you, Lewis.
Thanks, Brenton. Today marks 7 days since we rang the bell, which you can see behind me on a virtual ceremony. It was a very unique experience. But what I would like to say that it is beyond the ASX listing just a week ago, there was certainly some important milestones that occurred before then. And just to give everybody a brief history of Credit Clear, we essentially went to the market with after a beta phase of product testing in 2017, and we felt fortunate to have some early adopters that shared our vision and thought there had to be a better way than making the expensive and off processes that have been pretty much the norm for decades. We're blessed, as I said, to have companies like Prosper, like Money3, like TPG, and a handful of others that saw that sending SMSs and emails and digital communications might not be so crazy after all. And we're really proud to have those customers still with us today. And that led us to a journey of being supported by Bell Potter through our Series A funding, and then through to the listing, as I mentioned last Tuesday. What's more exciting than any of that is the rapid adoption of corporate Australia to using Credit Clear. We have a really impressive stable of clients, several ASX top 20 customers, many ASX 100s, and they use us because they trust us to talk to their customers about some really important stuff. And Credit Clear is a white branded, white labeled, non-invasive, non-threatening, friendly communication in the palm of a consumer's hand, the way they really expect to be communicated to about these types of matters in the current time. And undoubtedly, Credit Clear is a beneficiary of COVID. We have seen a surge in usage. We've seen a fourfold increase in digital communications, which is a really good metric to measure our continued growth and success by. Just since April alone, that's a 4 times uplift. And we're going to see ourselves having communicated over 1 million times a month in the current time. So the growth metrics and those key metrics that we judge ourselves on are really strong, and the reason that they are is no one specific thing that it can be put down to, but the understanding of digital collections in the marketplace in general is really key. And I think back to when we started this journey 5 years ago, and digital collections was not a concept that didn't exist. Credit Clear proudly introduced this notion of digital receivables management to the marketplace, and now it's a known quantity. And now the marketplace in corporate Australia and beyond knows that the power of data means that we can optimize outcomes, we can automate communication strategies, and we can automate processes and different languages and times of the day that we communicate to people. And all of these advances that technology allows us to create really strong outcomes in a traditional industry that we've well and truly disrupted. For the users, for what the debtor sees, the customer, the client, the guest, however our clients like to refer to them as, it's a total white labeled experience, right from who the SMS is sent from. It doesn't come from a phone number. It comes from, for example, that might say AGL. Then there'd be the AGL logo there. A debtor can click and pay the full amount in its entirety. They can make an arbitrary payment if our clients like to turn that feature on. Or what's most popular is the payment arrangement functionality. So no longer do we have outbound phone calls happening from collection agencies to a person who's fielding a conversation about a $50 a week payment plan that they might be able to make for their power bill that's overdue, while they're embarrassed to have this conversation sitting next to their colleagues at work or their partner at home, or whatever the case may be. No longer with Credit Clear do those uncomfortable two-way conversations need to happen. And that's a large mark of the success that we've enjoyed, is that consumers like this process, and we've been able to validate that too with some pretty interesting data. As you'd expect, our customers, our clients, corporate Australia, they get very comprehensive dashboards, analytics, insights, and optimization reporting, which is where we're going to continue our deepest investment in technology. We've spent $20 million on the platform to date, and we're going to continue to invest heavily. And where those investments are going to be made is the product for our customers, and making what their experience is of Credit Clear one that makes use of the data science, of the machine learning, and the artificial intelligence capabilities that are possible today. So when we go to a customer, for example, in the current time, and tell them that we can improve their collections rate by 5% based on making these changes, based on us analyzing the data, we have a future that's really close around the corner where we no longer have to make those changes. They'll be automated. The machine will decide what will optimize an outcome and what will need to be changed, whether it be the message content, the day of the week the message is sent, and a whole host of other variables. So it's a pretty exciting future for us with regards to the technology and extending that market leadership and dominance that we currently enjoy now. I'm now going to take a breath and pass back to Brenton.
Thanks, Lewis. The business is a whole of life cycle offering for the for a receivable management journey, and we can use our services before an account goes overdue to very late stage recovery. One thing that I really love about the business, or the product itself, is that when we send a message out, if the person's in China and we send them a request for payment, and they've got their phone turned to Mandarin, then they will get our messages in that language, and they can make their payments and they can do all the processes they want to do in that language. But what it also does, it allows our clients to go, okay, we've got someone that's opened that message, but they've opened that message in China. So our customers know exactly where their customers are, how they're reacting, and when they're reacting. And at the end user, they're also getting the ability to get a message that they understand and something they can deal with immediately. So they can make those payment arrangements and everything through our digital side. Now, the credit solutions side of the business, really, we get a lot of people that, also get their messages that come from us, and those messages could come from an SMS, they can come from an email, or they can come from simply a QR code that sits on the bottom of a letter where they can just scan over it and make a payment arrangement there. Whatever they get, sometimes they still want to speak to an operator. So the likes of, I suppose a good example would be Toyota Finance. We also even deal with their customers, I think it's about day 9 overdue, And what we do is we have some communications going out to them, and then we're dealing with those customers when they want to talk to someone, because it's usually a little bit more in depth than just something they can deal with straightforward over the phone. So the Credit Solutions is really a partner to the technology business. If we can't resolve something through the technology or through dealing with these people on the phone, then we have a national law firm that even works for some of our competitors. And that law firm basically also works with a lot of technology around processing things extremely quickly. Our expectation is that we'll be back around issuing up to 1,000 legal actions a month in the new year. Mainly we have done that before, and we do see that big bubble coming again, where we're going to have an awful lot of work coming our way in those areas. So we're moving. The one thing I will share with you really quickly, though, is that when COVID hit, where our flexibility is, we won a contract with AGL. We only got 1 week's work. And the interesting thing about it, that was going to be through solutions, so more traditional debt collection. But as soon as COVID hit, they came back to us and said, we need a completely different way of collecting. So we white labeled everything we did, and we put it into AGL's internal processes. That was all done within the week. The outcome of it was that AGL tested us. We didn't know this, but they actually did a test, and they did a champion challenge of our systems with their internal systems. And interestingly, after 30 days, our recovery rates dealing with their customers was up 20%. We thought that might have leveled off after a period of 3 months, but the most recent report they gave us is our recovery rates had actually got 40% higher than what they were internally getting. So we've tested this so many times. We know that we get better results. We've recently had another big water company in Western Australia. Well, there's only one, so we know who that is. And they're going to give us 100% of the work, really on the basis of how we treat the customers. So it's not just technology. Technology drives all this, but the customer experience is something that will be new for the Australian market. Just in relation to, Lewis mentioned that we have raised $15 million. We're a business that was and still is naturally debt-free. The $15 million is parked to one side, so we have no debt, $15 million in the bank. And how we're going to use that money is we're working with our enterprise clients around their pain points. So we will work on things that make a difference to our clients and that we can build for specific clients in an industry and then roll those out to that industry. So it's quite tight in the way that we'll be using funds. Part of our other spending is we're going to be expanding our sales force. In the past, we've been a business that hasn't had to do a lot of sales at all. We've had people come to us. So word of mouth has been 90, probably 5% of our business comes from word of mouth. But now we're going to go out and start telling people and corporations and government departments about the achievements that Credit Clear is making in the industry, and they are quite exceptional. In relation to international, we have that to a certain degree parked because we have such a large opportunity in Australia that's going to keep us pretty busy for the next year or two. But we are starting to get really good opportunities present themselves in New Zealand and UK. We've actually licensed our services over into the United States, and we're starting to now get some really good traction with international enterprises talking to us as a group around how we can do things internationally for them. Obviously, we have the technology to do that. In relation to margins, this is fairly straightforward. Our margins are all around our technology platform. It's pretty obvious, if 90% is the gross margin we make out of doing anything along our technology side. It's probably a little bit higher than that, but we'll call it, for all intensive purposes, 90% of our income goes straight to the bottom line from that point. And then the Receivables Management income, which is the solution side, has a higher cost of staff. And so we make a gross profit there of 60%. And when it gets to legal, that has some additional fees and searches and all that in it. And also naturally the lawyers want higher pays. And so we earn around 40% gross margin. So they're all quite profitable areas, but naturally our focus is our technology platforms and building those. One thing I will point out is I do believe that our business is a stock for today and also for any downturn in an economy. So when things start getting tight and when everyone needs to communicate about payments of debts, and we need to do it quickly and in bulk, I think you'll find that enterprise clients and government departments will start to switch over to ourselves because we're in a unique position. Our timing was pretty well perfect, and we are a stock for today. I'll pass you over to Lewis now just to talk through some of our board members and how that's constructed with our senior management team.
Thanks, Brent. And I'll round it out just by making note of the fact that we've significantly strengthened our board over the past 12 to 18 months with the addition of Gerd Schenkel as chair. He's a former CEO at Tyro Payments and executive at Telstra Digital and others, as well as Marcus Price, the founder and CEO at PEXA. So really strong technology and payments credentials have been added to the board, and those two especially are pretty hands-on and sleeves rolled up with regards to Credit Clear, which is fantastic for the company. Beyond that, the executive team has many years in their fields of expertise and credentials, as you'd expect them to have. We'll add that we've added David Henschke to the fold as Group GM of Strategy and Technology just recently. And then lastly, a bit of an overview of the float last week, which got away pretty successfully. So I'll now pass back over to Simon. Thanks everybody for your time.
Thank you.
All right, thanks Brenton, thanks Lewis. Just a couple of questions have come through, and just a reminder, the Q&A box down the bottom is where to submit them. First question is, I understand you are unique in the space, but who are your main competitors, if there is any? I
personally don't. There's a major difference between our business, and the main reason is we white label directly under our client's name. So AGL's messages go out as AGL. Our competitors at the moment tend to have a single line of communication that goes out under their collection agency name. So we don't really have the competition where we see it at the moment. There's words around, but the only company that we saw out there, 2 of the 3 clients that they actually had have agreed to come over to ourselves. So they sell a whole platform, whereas we sell a service. It's very different. So we don't see a lot of competition in what the specifics of we do, but there's a lot of people that can send an SMS naturally in our industry.
Great, and just probably an extension to that question. It's still early days, but what do you see as the eventual moat for the business?
The eventual
moat. In terms of defensibility, what's the moat? Is it technology, or is it getting scale with customers?
I've got you.
Yeah.
Sorry, I haven't really dealt with that word. So what our goal is we will look at potentially other businesses that have very high volumes of receivables working for other corporations, and we are interested in acquiring some businesses strategically that we can take on and convert to digital. But our main goal is to take someone like an AGL, show them what we can do, which we have, and use our systems way up the front end. So when I say way up the front end, the work that we were doing, we do about 50,000 messages a month for AGL. And if we had collection work with them, it might only be 5,000. So we're doing a lot more because we've white labeled in there, but they send about 5 million messages a month to their base regarding payments. So our goal is to go right through that life cycle, create real value adds into it, create champion challenge automated processes, as Lewis had pointed out to as well, but really be growing that organically. The strategy side of things, at the moment, we've got a bit of a weakness in Sydney. So we would be interested in acquiring a business that would really fit within our strategies and might have clients that are like telcos, and we don't do a lot in the telco space. We do TPG, but we don't do Optus or Telstra, and we have a real interest on working for companies like Optus and Telstra at some point. And if there's a simpler way to get in there rather than going through a tender process, that would really be interesting. As soon as we get through the top 200 in Australia and really do our best job with trying to get those customers on board, that's when we'll be looking at a different reach of clients around the planet.
And I just would add to the moat, Simon. Our continued investment in technology does form part of that, as well as what Brenton just said. Once we have captured and grown the business and the customer base that we're doing really successfully now, the heightened investment in technology and just that extended market leadership that we enjoy is also one element, as well as coupled with just the levels of compliance and governance and certification that this business has had to achieve and secure over the past few years, is also a small part of protection as well. It's not easy to have been able to get the levels of accreditation, government certification, compliance that you do need to when you're handling such sensitive payment and communication and customer data.
Great, thanks, Lewis. Just the last couple of questions. Can you please explain how your pricing model works, i.e. Credit Corp buys a book of debts, but how do you price?
Oh, that's a really good point. Just to make sure the audience understands that Credit Clear will never buy debt, number one. It's usually something we do point out, so we don't acquire it. What we do is we have digital is generally charges per matter, and then a small percentage, like a credit card type percentage over a payment. The communication side of it can be a flat rate per matter coming in, or it can also even be a commission base. We tend not to be as commission based focused anymore. We tend to be more of a flat rate focused. But a digital communication might cost, for instance, 30 cents. When it goes to solutions, it tends to cost probably $20. When it goes to legal, it probably costs $200. And legal is all around scale court fees. So whatever we are charging a client generally will be recoverable from a consumer, if we do get down to that part. We do have about 70 government departments. A lot of those are local government already, and we have been taking on a lot of water companies of recent times. So we have 6 water companies that we currently deal with.
Great, thanks. And just final question, could you please describe the regulatory environment within which you operate? Is regulation an opportunity or a threat?
I think Lewis was alluding to it is an opportunity because as a business, we're PCI DSS compliance. So that's your payment processing, highest level of security. And we have full implementation of policies around ISO 27001. Both of those are quite a job to get across. So ISO 27001 is data security. We also have ISO 9001, which is operational process and compliance. Our government clients definitely are looking for that. We probably even will get to the point, although we don't get pushed on too much, to go to ISO 14001, which is the environmental impact plans, just so make sure that we're looking at being a very good corporate citizen. But if we're a true fintech digital platform, we're not going to have a lot of paper, hopefully, so we won't have much of an impact on the environment anyway. We have licenses across the states, so we have to be licensed. You can't just go and get a license. You have to have someone that has a qualification or done a course, and those courses usually take a couple of years to get across. But we have a series of licenses and all the ones we need to operate in Australia. And most of those we can actually expand with mutual recognition laws.
Great. That concludes the questions. I might just hand it back to you guys just to wrap up, and we'll finish up there. Thanks very much.
Sure. Yeah, well, look, thank you so much for everyone for listening to us. It's never has been a really sexy sort of industry, you know, asking people for money. But, you know, our whole business is designed around doing a really fair job for a consumer, looking out for them, keeping their costs pretty well a lot lower than what they would have been in the past, and offering a service that is really a good community standing type service, and very good for enterprise clients, you know, from my perspective. And that's why I'm really interested in it.